You think making a little extra on the side is harmless, just a few $100 here and there, right? But here's the shocking truth. The IRS is coming after side hustle income, even the smallest amounts. That's right. Your part-time gig, your weekend hustle could be putting you on their radar. And the worst part, you might not even know you're making the mistake that triggers their attention. Stick around because I'm about to show you exactly what you need to do to avoid their traps. And trust me, you don't want to be caught in one. All right, so let's break this down. Side hustle income. What exactly counts? It's any money you earn outside of a regular W-2 paycheck. Think about it. Driving for Uber or Lyft, delivering for DoorDash, or selling stuff on eBay, Etsy, Facebook Marketplace, or Amazon. It's freelancing, anything from design work, editing, coding, marketing, to consulting. Even if you're just making a few bucks on YouTube or TikTok or getting some affiliate or sponsorship income, that all counts. And it doesn't matter if it's part-time, seasonal, or just for fun, it's still taxable. The IRS expects you to report that money, and if you don't, you're asking for trouble. But here's the question. Why is the IRS suddenly cracking down so hard on side hustles? Why now? Well, they've got the tools, and it's a lot easier for them to catch you than you might think. So here's the real reason the IRS is paying attention. They've got the technology to track you. Platforms like Uber, Lyft, DoorDash, eBay, Etsy, they all keep records. Payment processors like PayPal, Venmo, and Zelle, they track your deposits. Banks, they've got all your transaction history. The IRS uses this data to match what you report on your taxes with what third-party platforms report to them. And when those numbers don't line up, boom, the IRS catches it. This is the most dangerous mistake people make, thinking that small amounts don't matter. So many people say, I only made a few $100. Why would they care? Well, guess what? If the IRS sees any income that doesn't match up, they don't care how small it is. They'll come for you. Here's the kicker. If you made, say, $2,200 from your side hustle and you didn't report it, the IRS isn't going to see your expenses. All they'll see is that $2,200. And that, my friend, is exactly what'll trigger an IRS letter. Here's where things start to escalate. This isn't just about a single mistake anymore. It's a pattern, a system that's been in place for years, quietly monitoring your every move. Think about it. People used to get away with a little underreporting here and there. But today, the IRS has automated software that analyzes everything. When they see mismatched numbers, it's not just a mistake anymore. It's a red flag. The IRS can't afford to let these discrepancies slide. They need every penny, and they're coming for it. And now, because of the way technology has evolved, it's easier for them to catch even the smallest slip-ups. This is becoming normalized, something that should not be normal. This is not the old school IRS. The game has changed and the consequences are real. But let me hit you with something even more disturbing. Imagine this. You think you're fine because you didn't make that much money, or maybe you didn't get the tax forms. But guess what? The IRS doesn't care. The moment they see that income mismatch, they're coming for you. A lot of people think, I didn't get the 1099 form, so I don't have to report it. That's the second biggest mistake. You have to report every penny, regardless of whether you get a form. If you don't, you're digging your own grave. Even if it's a small amount, if it doesn't match up with what was reported to the IRS, you're now on their radar. The worst part, you might think you're in the clear because your side hustle wasn't profitable. But that's not how the IRS sees it. They only see the total amount you earned. If you didn't report it, they'll try to tax you on the full amount, even if you didn't make a profit. That's how you end up paying taxes on money you never really earned. Now, let's rapidly stack a few more red flags the IRS looks for. First up, mismatched third-party reports. If someone reports that they paid you for a service and your tax return doesn't reflect that, you're in trouble. Then there's the issue of large deposits that don't match your reported income. It doesn't take a financial expert to spot a discrepancy like that. If your income is low, but your deposits are massive, the IRS is going to start asking questions. What happens next? Well, if you're caught in a situation like this, you're either going to have to explain yourself or face an audit. But it doesn't end there. The IRS also watches for huge expenses compared to tiny revenue. If you're showing a business running at a loss year after year, they'll start to wonder if you're actually running a business or if you're just trying to avoid taxes. And the worst mistake of all, suddenly changing your income. One year you're making thousands, and the next year you report almost nothing. That sudden drop-off gets flagged faster than you can blink. So what happens if this continues? You're playing with fire, and the IRS is ready to burn you. Let's get personal for a second. What does all this mean for you? If you're running a side hustle, this isn't just about numbers on a screen. It's about real consequences. Maybe you think you're too small to be noticed, but the truth is the IRS doesn't care about your size. What they care about is matching the dots. And if your income and records don't match up, you're at risk. It's easy to think that this is just an annoying formality, but for many, it's a nightmare. You might find yourself dealing with months of stress, fighting to prove what's yours. Worst case, you end up overpaying, scrambling for receipts, or hiring an accountant to help you untangle the mess. All of this could have been avoided with some simple steps. If this feels familiar or you've experienced something like this before, drop a comment below. Let's talk about it because you're not alone. So why does this keep happening? It's not just about mistakes. It's about a system that's built to catch you. The IRS doesn't operate on fear or chance. They're using a finely tuned system of leverage, automation, and surveillance. They don't need human auditors poring over every single document anymore. They've got the technology to do it automatically. When you make a mistake, it's not personal. It's just a cog in the machine. The system flags discrepancies, mismatches, and patterns. And if your records don't line up, the machine sends out a letter. It's all about leveraging automation to squeeze as much as they can from taxpayers. The issue is bigger than individual mistakes. It's about the power of institutions that have the resources to monitor every transaction, every payment, and every deposit. And we as taxpayers are left navigating through this intricate web, hoping we don't trip up. Now, let's look ahead. What's next in this ever-growing crackdown? There are two paths this could take. On one hand, the IRS could keep tightening their grip, using technology to capture even more side hustle income, targeting every discrepancy, no matter how small. On the other hand, we could see more leniency, where perhaps the IRS adjusts their focus or introduces new regulations to make it easier to report income without getting caught in the automated system. But here's the thing. Neither path looks easy. The momentum is clearly building towards more oversight, not less. You might be thinking it's not a big deal right now, but in a few years, it could be an entirely different situation. The real question is, how will you navigate this? Will you stay ahead of the curve, or will you get swept up in the system that's already in place? So here's the hard truth. Side hustle income is no longer just about earning a little extra. It's about staying organized, keeping your records straight, and reporting everything, no exceptions. The IRS doesn't care about your intentions. They care about the numbers, and those numbers better line up. If you've learned anything today, it's that small mistakes can lead to big problems. Now take control, separate your personal from your business income, track everything, and don't wait for the 1099 forms. It's not about being perfect. It's about being proactive. And remember, the next video will dive into exactly what steps to take if the IRS does come knocking. Subscribe now because the next part of this story is already unfolding. Stay ahead of the game and you won't be caught off guard.